Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com. Founded it 22 years ago back in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trade systems. This is a quick intra-week stock market update. Again, my videos are never that quick, but we're going to cover everything in depth. The last video I actually posted yesterday was on the market exhaustion condition that had set up. There's actually been some news about that. It's the number of consecutive days the S&P and NASDAQ have been trading above their 20-day moving averages. Haven't seen it since the 90s. So again, I talked about this yesterday, but I actually went ahead and ran those statistics back to 1970. So that's 55 years. There's essentially been 11 examples of it, actually 10 really, because the way my system does, it scales in a couple times. So all these previous times were one entry, but anyway, just showing you guys a quick update that even back to 1970, there's only really 10 examples of this where the S&P has been this many consecutive days trading above its 20-day moving average. You can see, there was the first example was 1970 or 1987, March 2000, and then you didn't have one for 11 years later until 1998, etc. Anyway, again, went over this yesterday. So eventually, guys, I know it doesn't feel like it'll happen. Eventually, we're going to get a mean reversion, move down, pull back, where the S&P and NASDAQ close below their 20-day moving averages. Okay, this is a big news item week, monster news week, as you know. Mega tech earnings with Apple, Amazon, Meta, FOMC on Wednesday, monthly jobs reports, tariffs. On the weekend, there was some positive news with tariffs, deal with Europe, deal with China. But again, there'll be some sort of catalyst that causes this. And after this week, because these are some of the, all these news items are some of the things that have helped hold the market. After this big news week, that could also be a reason for the market to eventually, have that needed pullback. Like I said, monster week for earnings here. But let's go and get to this newsletter at hand here. This newsletter is divided into 8 major sections. I'm going to talk about some admin things first, a little bit about the exhaustion short, and then the Matt's macro, and we'll cover all the other sections of the market, etc. Anyway, I'm going to get this started for our subscribers. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Monday, July 28th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. As far as trade ideas, guys, Steve and I haven't been putting too much out lately. I did put out one idea this evening, and but otherwise, mainly just covering recent ideas. Market's been aloft for quite a while. We're in this kind of exhaustion condition in the markets where the markets have traded above their 20-day moving average is consecutively for something like 65, 70 days. It's a rare condition. Going back to 1970, it's only occurred around 10 times. So eventually we're going to get a mean reversion move back below that 20-day moving average, if not something more. This is a monster week for news, as you know, with big cap tech earnings from Meta, Microsoft, Amazon, Apple, a bunch of other earnings. FOMC on Wednesday, jobs report, Nonfarm payroll on Friday, and of course anything new with tariffs. And one comment is, after this week, a lot of these catalysts will be gone. Maybe that's another reason for the market to possibly pull back. And it's kind of like, think of an analogy like this. When the market's selling off, there's bad news after bad news. Eventually it just, it bottoms. Same thing kind of, here. But we'll see. Nothing's changed with the trend, obviously. We've definitely had one of the biggest wall of worry rallies since the April 7th lows. And, it's been a crazy year. One thing that's done amazing is our KISS systems, because they've caught this trend. Anyway, first image below, item number 2. So on Sunday, I sent out an YouTube video where I discussed the exhaustion condition on the market. And we have that exhaustion short that is triggered on the SPY ETF and ES futures. There was actually a second entry on Friday that I sent out to our subscribers. But this condition's actually kind of been discussed in the media, CNBC, Zero Hedge, some other places. But what it is the consecutive number of days the S&P and NASDAQ have traded above their 20-day moving averages. And, it's only been a couple times since the 90s where we're at right now. And I took that stat further back on the weekend video. I took it back to 1981. I took it back to 1970 here. And so even if I go back to 1970, it's still about the same number, around 10 trades, 10 examples. Now, you could see number 11 here, but this 10 and 11, there's actually a first and second entry. I kind of call that, the same trade. All these others are single entries. So we essentially have 10 examples of this going back 55 years. So it's a rare condition. You can see the max drawdowns around 2%. So again, I don't see the market going up another 10% from here with this stat. Doesn't mean it can't happen, but eventually we're going to get that mean reversion. We got all these news items this week, and especially after this week, there's not going to be a lot left to potentially keep pushing this market, but we'll see. Nothing's changed with the trend, but just giving you a quick update on the exhaustion condition. So again, eventually we'll get that mean reversion move on a close back below the 20-day moving average. Next. Image number 3, Matt's macro vision. So this is my, been covering this for the last month plus. It's my long-term macro swing trade plays. And, it's been very popular, and I've been very good over the years about picking these. But again, I want to reiterate, guys, that I've added these to the KISS systems. So let's take a look at that. So image number 4, so this is taken right from the KISS systems. So if you go to systems, go to KISS STS tables, we have a bunch of other stuff there, but when you go there, you'll see Matt's macro vision, and it's actually moved over to the left-hand side now. When I took this image, it was still on the left. But anyway, all these Matt's macro are now in the KISS system. I put those there last week. Okay, but I just want to reiterate that because, yes, these Matt's macro vision plays, long-term swing plays are long ideas you could potentially hold for months to, maybe years at a time. But you have to decide, are you one that's just going to hold it the entire time, or do you want to ride, the trends if it goes up a few months, and then if you want to get out if you think a consolidation pullback's coming, then buy back in. Well, that's where this comes in. These KISS systems, they're long only, and they give you that methodical way to trade these. So, where it'll give you clear buy signals, where to put stops, and it will tell you when to get out. And you can see here, these are up substantially, okay? But the reason I'm also mentioning this, guys, is because, as you know, there's 2 subscriptions on the website. There's the standard regular membership that includes all the newsletters and trade ideas and some of the mean reversion stuff, systems, the active community, stuff like that. But we also have the KISS systems, which is a separate subscription. So if you're one who only has the standard membership, you never bought the KISS systems, this is actually something you may want to consider, even just for this, because you'll get these automatic Matt's macro vision if you want a systematic way to trade them, where you're being told, when to enter, where to set a stop. That's what to do. Now, if you already have the KISS systems, great. They're here. Go make sure to go set your favorites. You'll get automatic email updates on this, etc. And this is just the standard KISS systems. I'm eventually going to add it to the high performance as well. That'll be extra performance, smaller time frames, 78-minute, 130-minate, stuff like that. The standard KISS is the daily ones, but even the daily you can see pretty damn good. Look at some of these gains here: 45%, 33%, 60%, 101%. So again, I just want to reiterate: if you have a KISS system subscription, Matt's macro vision is already here. Make sure to set your favorites, and if you don't have a KISS subscription, now's a good time to add it so that you get access to this. Okay. Next, image number 5. So here's an example of, how you would receive emails for the KISS system. Apologize, guys, my phone's ringing on the background. But anyway, you'll get daily emails to your KISS systems if there's an update. So this is an example from last week. This is actually my email address, and comes in like this. From support at Breakpoint Trades, daily STS emails. It'll tell you if there's new stops or exits, etc. So it's a pretty cool thing. Let's do a couple updates on those Matt's macro trades, by the way. So image number 6, here's AMD Advanced Micro. This is also one of my Matt's macro vision plays. I've loved AMD for the last several years now. I'm a tech guy, and I saw what AMD was doing and how they were going to eat Intel's lunch, and that's what they've been doing. I mean, it's really pretty sad to see Intel how far they've fallen. They basically had the mountain and they lost it, right? So anyway, AMD continues to really move up here. It's been trending up all year. Made a new high again today. Now earnings are the 5th, August 5th, so that's next week. But there is a little, man. There's really no MACD divergence here or anything. I mean, it's still very, very strong. Here's some of the bigger picture charts. So chart number 7, here's a weekly view. You can see it's rallied up just over the 61.8 fib retracement off the 2024 highs to the April lows. Now, earlier this year, back in April, I talked about a trigger here over this downtrend line in the RSI, and this is a great just educational example. So, we're all used to drawing trend lines on price, stuff like this, flags, coils, whatever. But once in a while, you can draw trend lines on indicators. And on RSI, when you can draw a really well-defined indicator like this can give you a very objective entry. So you actually had you had a nice clean break here. You had multiple touches on the trend line. So you had a nice clean break here. So your trigger point could have been down here on the weekly. It would have been an excellent trigger. Now, getting a little overbought short term. Weekly RSI is getting overbought, but man, that was a heck of a move from there. And image number 8, here's the monthly view. Again, I like this long term, but when the market does finally have a correction here, pullback, say this fall, I would expect this to pull back too, but I'll be looking at that correction as a buying opportunity. And by the way, I do want to make one other comment on the market, guys. Like I said, we have a lot of news items this week, but also seasonality usually starts to play out in August sometime for maybe some weakness. Next, some other ones. Chart number 9, here's platinum. As you know, I pounded the table most of the year for platinum, especially in March and April. It had a massive rally. A lot of you caught this, but it got very overbought a couple weeks ago. Very wide moving average ribbon. You see that there. And now it's correcting here. So I'd expect at least a pullback to the 9-week EMA, or if not, some deeper ABC pullback. Here's another example. Notice the RSI trendline break here. You see it right there? That also corresponded right with that coil break. So another example, that RSI trendline break. Next, chart number 10, here's Remax, another one of my Max macro plays. Remember, this triggered, well over a month ago out of this beautiful wedge pattern from this weekly demand zone. You got a double MACD positive divergence here. Just absolute gorgeous, gorgeous setup. Fundamentally, rare earth, that's another good reason. So not just chart based, but this should be something that is in focus. At least it should be for the administrations. Just you don't want everything with China. But anyway, it's had its first move up into the first supply zone. So finally a little pullback at the moment. But longer term, again, it should go higher. Shorter term, like I said, was very, very extended. Here's a daily. Look how wide the ribbon got. Look at the RSIs were sky high. So it was trading outside its upper Bollinger Bands for a while. You finally had a black candle doji last Friday. So now pulling back. First support here would be the 9 EMA. If it loses that, maybe it comes down to the 20. But MACD is healthy. There's no divergence here. So I would view some sort of 3-wave ABC pullback as a buying opportunity. And all right, the reason I was looking at my computer. So something like this, guys. Let me redo this. So let's make this into some sort of ABC and then should be a good buying opportunity once again. Okay. All right, moving on. So that does it for that. Let's move back to the general market newsletter at hand. So item number 12 shows the index sector table, what transpired today. You can see a little bifurcation for the major indexes. Dow, Russell, just slightly down. S&P and NASDAQ slightly up. All right. As far as the 21 market sectors, actually quite a bit of red here. So more red than down, and you can see a lot of weakness in utilities, biotech, home builders, consumer discretionary, etc. Currency-wise, US dollar, huge move, guys, up 1.14%. Last week, I pointed out a MACD stochastic MACD KISS stochastic oversold long setup. I told our subscribers I went long UUP calls. Should have went long US dollar futures. Massive pop there. I'll go over that well below, but that was a perfect setup. Cryptocurrencies, Bitcoin pulling back here. It was up over the weekend, went into some resistance. Same for Ethereum. Okay. Now Ethereum is another Matt's macro play I like longer term. Commodities, DBC, the index up 1% today, largely with crude oil up 3%. So big rally off that support I've been showing. Pull back in some of these other commodities like copper, uranium, some of the ags. Precious metals pulling back, as you'd expect with that move in the dollar, especially the stocks, the miners, they tend to lead down 2.5%. And as far as the bond market, 10-year, 30-year up this week. Now again, FOMC will be a catalyst for bonds this week on Wednesday. And item number 13 shows the economic news calendar, which I already discussed. We got a slew of earnings, slew of economic news this week from, FOMC, earnings, jobs report, you name it. Image number 14. So here's a nice little calendar showing you some of the major earnings. But like I said, guys, the big, at least tech ones this week are Meta, Microsoft, Amazon, Apple. And let's take a look at some of these. So chart number 15, here's Meta. This reports on Wednesday after the bell, July 30th. Kind of has a little channel flag here. Now we'll see if this can pop up another time. Kind of has a cup and handle look, but the only thing that would concern me there is the market position of the market at the moment, but we'll see how this reacts. Next, number 16, Microsoft. Now this thing is, like I said, just drifted higher. These are all little tiny candles that have just drifted higher. All right, and so no changes here. We've had this MACD divergence building for 2 months now. That's why divergence is never a sell signal. You got to have a trigger of some point. But anyway, this reports on Wednesday as well after the market. Chart number 17, Amazon. It's been drifting up here. This reports on Thursday after the close. All-time highs aren't too far away. And chart number 18, Apple. This reports on Thursday as well after the market. We'll see how this is. Apple, honestly, has been definitely struggling here a bit. They're way behind on their AI. Other things, I think. I'm not an Apple guy, so I don't have an iPhone. I think probably a lot of you do. But honestly, iOS seems pretty stale to me. But anyway, we'll see what this looks like on Thursday. Last week, Tesla reported, and it's actually bounced here off this coil that I've been showing. So the bullish view would be in blue. So if that's correct, the low should be in at 300, and this should eventually break out. The bearish view would be this ABC that'll break to the downside. So we'll see. Otherwise, price is still in this obvious coil pattern. And chart number 20 here is Google. This reported last week as well, pulling back a little bit from last week's highs. All right, moving on to the indexes. So chart number 21. Sorry about this, guys. Dealing with this little... Anyway, chart number 21. Here's the daily chart of the 5 key major indexes. The Dow here last week tested its all-time highs, still kind of struggling there a bit. Whereas the S&P and NASDAQ all broke their highs, quite a while back. Chart number 22. Here's the KISS system for the daily SPY and S&P 500. So No changes here. Smart trailing stop on the S&P remains at 62.73. You can see these beautiful mean reversion trades that occurred inside the main KISS long. KISS would have went long there in late April. And you've had 4 mean reversion longs here. The last one closed out last week. Beautiful. Again, this is experimental, but I eventually would like to perhaps include these with our mean reversion S&P 500 signals. I think these are awesome because they have, if they're wrong, they have a stop at the smart trailing stop. So this last one on the S&P, had it not closed out and we would have sold off, the stop would have simply been the 62.73. And here's the SPY ETF above. Next, image number 23. Here's the 4 time frames. Again, nothing to say here. Continue to trend up. This simple ATR, 14.3 ATR, is support on all the time frames, even down to the 78-minute. Next, number 24, here back to the standard charts. Here's the daily S&P. Like I said, we're still in this wave 3 of 5, guys. Like I said, no changes. This nested 1-2-1-2. Still holding this uptrend channel, still holding the 90 EMA, still holding the 20-day, blah, blah, blah. Until we break some supports, not a lot to say here. Chart number 25, another daily chart of the S&P, just shows you that channel a little more zoomed in here. Chart number 26, here's a half-day chart. Again, these represent these obvious higher lows. We're just continuing to make higher lows and higher lows. These could also be used as stops. That's kind of similar to how the KISS systems work. They move them up to the higher lows, sort of, with those smart trailing stops. Keep you protected, keep you in the uptrends. Another thing I want to point out, guys, is the 60-link stochastic. Now, I think I'm one of the guys who pioneered this 15, 20 years ago. I've actually finally seen some recent analysts talk about it, but I've noticed whenever it gets above 80% in trends, that's something to watch. You're in a trend momentum condition. You can see that went above there in early May. And every pullback has found support right on top of the 80%. But it's something to watch going forward. Eventually that'll break. But for now, that remains intact. Next, chart number 27. Here's a 2-hour view. Remember, a couple weeks ago, that pullback in mid-July, we pulled back right to that demand zone, retested that extended trend line, found support. Here I added a second trend line, just showing you how slope increased. So that's your current support. And finally, chart number 28. Here's a 15-minute chart. Again, guys, until we break, structure, and what I mean by breaking structure would be, say, breaking that 63, 62 on this time frame would be an example of breaking structure. Until we break structure, really not a lot to say here, guys. Until we break structure, some support, stuff like that. You can see the pullback today from the morning highs. Futures were up overnight quite nicely. They lost those gains, but we pulled back and bounced a little bit late in the day. Next, chart number 29. Here's the daily KISS high performance system. Now remember the S&P closed out last week. This one closed out today. So a beautiful long there a couple weeks ago. That BPDS mean reversion entry inside the main KISS, which went long on April 7th there on that big candle. And so beautiful trade there. It closed out today. Again, I don't email these out to the website yet. I've been showing you guys so that, one day when I do add these, you'll at least know what I'm talking about. But I really like these because they use the smart trailing stop as a, potential exit. Next, chart number 30. Here's the 4 time frames. Again, just like on the S&P, ATR is your support on all the time frames at the moment. Next, chart number 31. Here's a daily, back to the daily standard chart. So here's the daily triple Qs. Little doji candlestick you can see there. A little tiny, very tiny doji, so indecision candle. Again, until we lose supports, or at least some short-term supports, not a lot to say. This boxed area is your first demand zone now. So on a pullback, we'll watch that. And guys, in my newsletter I should have discussed this on the S&P, but in my newsletter, or in my beginning of my video when I discussed the exhaustion conditions. So that's where the market's been above its 20-day moving average consecutively for all these number of days. So the blue moving average is the 20. So eventually we'll get a mean reversion move back below that 20-day moving average. Next, chart 32, here's a half-day chart, shows you essentially the same thing. I also highlight this 60 stochastic trend Momo condition at the bottom here as well. Next, chart 33, here's a 2-hour view. Again, not much to say, just uptrending, uptrending, uptrending. And chart 34, 15-minute view. Again, until we start breaking some structures, even on a smaller time frame, there's not a lot to say. All right. And finally, chart 35, IWM small caps, a little pullback today. Again, this in the Dow. So you can see it continues to struggle a little bit into the supply zone. All right, guys, that does it for the general market. Let's go and move on. So chart 36, here's the VIX. So the VIX closed up just slightly today. So it looks like it closed at, did it close below its lower Bollinger Band? Let's see. Yeah, it closed back inside its Bollinger Band. So that's potentially a little small VIX Bollinger Band sell signal. But again, price has yet to break, and this is a big news week. Also, we talked about these Bollinger Bands pinching last week. Sometimes, guys, and I commented to Steve about this, obviously we moved to the downside instead, but sometimes you get a little fake out where your initial move, like say you move down first and then boom, you spike up. Sometimes you get that, okay, to fake you out. So we'll see if that ends up happening or not. Next, chart 37, here's the VVIX VIX ratio. Remember, the VVIX is the volatility of the VIX. And this can give very objective buy and sell signals when it gets outside its Bollinger Bands. You can always pause the video and look at this. Sometimes it's early by a few days, but it's pretty good. Anyway, it did get outside its Bollinger Bands last week. Closed back inside today. So it is selling that this is an area to be cautious of now. All right, moving on to a few of the sectors. Just look at these really quickly. Some of the major ones. Chart 38, here's XLK Technology. Again, we continue to hold that 9 EMA to continue to be in this trend Momo condition. Chart 39, XLC Communications sector. Haven't shown this for a little while, but remember a couple weeks ago I talked about this consolidation. I said it looked bullish, and it did end up breaking out, making a new high there before pulling back the last couple days. But that new high did set up an RSI and a MACD divergence. Chart 40, banks, a little pullback today. Now there is some divergence setting up here on the MACD and RSI to be aware of. They've had a pretty good move, so they are a bit stretched. Chart 41, transports, still hanging around here, still around the 20-day moving average. Chart 42, home builders, still holding up here. Now this had a nice pop last week. Again, what long-term rates will do, and maybe the FOMC this week could affect this. Chart 43, XLV healthcare. Last week I showed a coil pattern, so pulling back off that coil pattern at the moment. And chart 44, XLE energy, bounced last week off the 50-day moving average, so it's inside this kind of coil setting up. All right, moving on. Chart 45, high yield corporate. Remember, this tends to be a leading indicator. Market tends to follow high yield corporate, and it made new highs first before the NASDAQ and S&P. But anyway, after that breakout from that flag pattern, it is setting up some divergence here to be aware of on both the MACD and RSI. Again, hasn't lost any short-term moving averages like the 9 EMA or the 20. If it starts losing these, that'll definitely be something to pay attention to. Chart 46, here's the 10-year Treasury yield. Little bounce today. Otherwise, it appears to be forming some sort of triangle coil pattern. So again, FOMC this week could be a catalyst, perhaps. Moving on to commodities, chart 47, DBC, commodity index, up 1% today. But again, I just like to show the weekly. Shows you it's basically been in this channel for almost 2.5 years. Chart 48, crude oil. Nice rally today. Remember I said it rallied off that big support, and you can see that's what it did. Rallied right off that support level. Chart 49, UNG natural gas just continues to work lower. It's been in a steep downtrend since the March highs. Jarbor 50, copper, nice pullback today, down 3%. This had been running up after the tariff, was quite overbought. You could see nice pullback today. Did find some initial support at the 20-day moving average though. Jarbor 51, DBA, agriculture, bouncing a little bit. It's coming up near the under the side of the 200-day moving average. Jarbor 52, platinum. Remember, platinum was one of my Matt's macro plays, but week and a half ago or so, I showed this wave 5. It had formed another coil, popped out, but I said that looks suspiciously like a 5-wave uptrend with divergence on the MACD and RSI. I took an aggressive short on it actually. So starting to play out here. Perhaps an eventual target now would be the 50-day moving average. I don't expect it to go straight there though. So maybe something like, get a bounce soon, lower high, then down again. And if it's the 50-day were to come here, that would be a good buy opportunity. Again, that's an idealized situation, but again, I'm long-term bullish on this, but clearly whenever I see 5 waves up with divergence, for me initially, it's time to take some profits. All right, moving on. Let's see. Jarbor 53, Bitcoin, a little pullback today. You can see pulling back off some resistance. You got a 920 MA squeeze here. Now, if this loses this, you have the big support down here, obviously. Jarbor 54, IBIT, the trade idea we put out back in June. So far, just consolidating sideways here. Looks okay. Jarbor 55, Ethereum was up, but pulling back today. There is some RSI divergence. Otherwise, I wondered if it kind of has a big old cup and handle look that it may be setting up. We'll have to see how that flushes out a bit. Jarbor 56, here's Ethereum ETF, ETHE. And Jarbor 57, here's Ethereum on the weekly. Again, this is part of Matt's macro vision. We have this 4-year coil that is formed. Now, what we possibly could see here is a pullback from the top of the coil here, right? I don't know how far the pullback goes, but if we're to do something like that, boom, that could be, say, your buying opportunity. But I do like this over Bitcoin because while Bitcoin is, more than doubled during this time frame, Ethereum has consolidated. And Ethereum's got a lot of uses that Bitcoin doesn't. So I do like this. It's in a coil. We're going to watch it. Next, let's talk about the US dollar, guys. Here's the dollar up big today, up over 1%. Now, remember, the dollar kept stalling around its 50-day moving average, but it had set up a beautiful MACD divergence. Now, here's the setup I was talking about last week that I put out. It was pulling back. I saw a lot of folks out there thinking, oh, we stalled at the 50-day moving average again. We're going to make a new low. I saw the potential for a higher low bottom, all right? For number one, we had this beautiful MACD divergence. I don't show the wave counts on here, but we could count clear 5 waves completed. But what we had here is what I call a MACD kiss. It's where the MACD line comes in and kisses. It's not really crossing. And at the same time, you have a stochastic that is oversold. So that's rare for that to happen. Usually when the MACD gets close, your stochastic is already, your MACD, by the time your stochastic is already moved by the time that gets there. So that doesn't set up very often. That set up your condition here, and I said you just needed a trigger over here. You actually got a trigger last week on Friday. I went long the dollar UUP calls. Honestly, I should have went long futures. I don't really play dollar futures, but anyway, big pop today. Reclaimed the 50-day moving average. So to me, the dollar looks confirmed bottom. Okay, beautiful setup. Next, Jarbor 59, here's the UUP US dollar ETF. You had the exact same setup here. Okay. Again, I didn't buy the UUP itself just because, it's up 31 cents. You got to buy so many damn shares to make any money. That's why I bought the call options. Next, precious metals, Jarbor 60, gold. Nice pullback here. So with that rallying dollar. So again, this coil is still in action here. The bullish view would be this is wave E and eventually would find support here and rally and break out. But the bearish view in red is definitely a possibility, especially if that dollar is bottomed. And I've been kind of favoring that this coil could be a fake out and break to the downside, so we'll see. I've still been favoring that 3,500 spike high in April was a high for gold for a while. Okay. Chart 61, here's GLD ETF, gold ETF, so we're basically right at the bottom of that triangle pattern. Chart 62, silver. Nice little pullback here so far. You had some divergence at the highs recently. Silver's on a different spot than gold, though, longer term, but whatever, little pullback. And chart 63, here's SOV, that's the ETF. Chart 64, GDX, gold miners. We had a little double top early last week, pulling back. Now, down 2.5% today. It's still holding this support area here, but, you know, the bulls need to defend this. And the final thing, guys, let's move to trade ideas. So I only added one new one today, but we'll discuss some recent ones. Chart 65, TSSI was a long idea early last week. Gave you a nice little trade. Now, if you didn't take some profits, nice pullback here today. Chart 66, GOS was a long idea of mine 3 weeks ago. This cup and handle breakout idea, and it continues to consistently move higher. Nice trade from that 155 break. Chart 67, Venu was a long idea of mine early last week. So popped on Tuesday there. Nice move. Chart 68, ALAB, another one. Popped a couple weeks ago. It's been a nice trade here. Chart 69, HUBC was a beautiful trade out of this base. Rallied up. It's been pulling back. Now the pullback has been lighter volume here, so if you took your profits, you may want to watch for another trigger long. Chart 670, QuantumScape. This was a monster trade out of this base. You know, tripling or quadrupling essentially, or whatever, at least tripling from that little coil down there. Is way overbought. Look how wide the moving average ribbon was. RSI 14 was way over 90. But it's now finally coming back to reality. That said, the 20-day moving average here in blue, you may get a bounce here. I may look to buy a quick bounce trade off of that area. Chart 71, CATX, this nice base. I'm still watching this one, guys. Resistance is 464, but I like the base on it here. I like basing patterns. Chart 72, Blade, one from last week. Still valid in this coil pattern. Chart 73, Zeta, one from last week. Coiling here. I do like this coil pattern. And the final setup here, this is the new setup I added tonight. Only the one new setup is NBR. Nice little basing pattern here. Nice triangle setup. Nice volume today. I've looked at an intraday chart. Looks pretty good. Moving average ribbons tight. So this looks pretty good, guys, over this over today's highs, over 35.55 to 35.65. All right, we'll see what happens this week, guys. Again, thank you for all your support. And if you're just a YouTube video, or if you're watching YouTube, if you can like and please make a comment, that really helps YouTube. YouTube helps push the algorithm. So please appreciate the support if you guys can at least do some interaction there. All right, take care. Have a good evening.